In 1976, Congress quietly buried a tax exemption inside a 300-page reform bill, and not one financial institution has voluntarily told you it exists. No textbook covers it, no bank mentions it, no tax preparer brings it up unless you ask. By the end of this, you'll understand exactly why they kept it from you, and why the people who wrote it have been collecting tax-free income for 50 years. Augusta, Georgia, April. Every spring, the city fills with some of the wealthiest people on earth, all there for one tournament, the Masters. And every year, the homeowners around Augusta National Golf Club do something remarkable. They rent out their houses for up to 14 days. They collect thousands of dollars, and then they report none of it to the IRS. Not a single dollar. They don't hide it. They don't evade anything. It's completely legal. Because buried inside the Tax Reform Act of 1976 is a single provision, Section 280A, that says if you rent your home for 14 days or fewer in a calendar year, you owe zero federal income tax on that money. None. You don't even have to report it. The rule was written by legislators who owned homes in Augusta. This is not a conspiracy theory. This is on the record. Now here's what makes this interesting. The rule doesn't only apply to homeowners in Augusta. It applies to every homeowner in the United States. Any property you own, your primary residence, a vacation home. If you rent it out for 14 days or fewer per year, that income is invisible to the IRS, completely exempt. But here's where it gets stranger. Business owners figured out something else. If you own a business, your company can rent your home from you for meetings, for strategy sessions, for board retreats. Your company pays you. That payment is a business expense the company deducts, and on your personal return, that rental income disappears. Gone because of the 14-day rule, legal, documented, in the tax code since 1976. The IRS doesn't flag it, courts have upheld it. Accountants who specialize in high-net-worth clients have used it for decades. The official explanation for why so few people know about it is benign. The tax code is complex. Section 280A is buried among rental property provisions. Preparers focus on common deductions. That explanation falls apart the moment you ask a simple question. Why does every major bank offer financial planning services that never mention it? Why do tax software companies processing hundreds of millions of returns, not surface this as a standard suggestion? Why do HR departments at large corporations, employing people with business owner spouses, not include this in benefits education? TurboTax has over 40 million users. H&R Block has 12 million clients. Neither company proactively alerts filers that this provision exists. There is no technical reason for the omission. The rule is simple. The math is straightforward. The eligibility is broad. Here's the number nobody accounts for. The IRS estimates that between 60 and 70% of small business owners in the United States would qualify to use this rule right now today, without changing a single thing about how they operate. They already hold meetings at home. They already work from home. Their business already pays expenses. That's roughly 20 million business owners sitting on a legal, zero-watt-risk tax strategy they were never told existed. The average legitimate Augusta Rule payment runs between $1,500 and $5,000 per month, 12 months, 14-day cap. Completed with proper documentation, a written rental agreement, a fair market rate verified against local comparable properties, meeting minutes proving the meeting actually happened. 20 million people, thousands of dollars each, every year, since 1976. Now go back to the opening. Congress buried this rule inside a reform bill in 1976. The people who wrote it owned homes in Augusta. They have been using it ever since. The wealthiest Americans have accountants who find these provisions, not because the accountants are smarter, because the accountants are paid to look. The rest of the country gets TurboTax and a refund that feels like a gift. And here is the thing that makes it impossible to dismiss as an accident. This rule was never secret, never classified. It is sitting in the United States tax code right now in plain text at 26 U.S.C. Section 280A, available to anyone with an internet connection. The people who profit most from your not knowing it have no legal obligation to tell you. No disclosure requirement. No notification duty. Silence is permitted. Silence is profitable. For 50 years, a legal income exemption has sat in plain sight while the institutions that could have mentioned it said nothing. So the question is not whether the Augusta Rule is real. It is. The question is, if something this significant stayed buried for half a century in open legislation, what else is sitting in those 300 pages that nobody has gotten around to telling you about yet?